before the sale of the properties, it is advisable to take some consultation.
With this NRI money, can he purchase any kind of property in India?
He can purchase any property other than foreign nationals. They are prohibited from purchase of. So generally bankers will ask whether Form 15 CACB has been obtained. If not, you obtain.
And what about ancestral property, sir? So the sale of ancestral property also, does it have any restriction?
As per will person is receiving cannot be stopped by any law.
This non-resident has enjoyed his life abroad. He's earned a lot of money, built his assets there, has his Indian bank account as well, and now he's decided to finally come back to his motherland, India. So at this time, for how long can he hold his foreign currencies, foreign assets, and what about his Indian accounts? Until when will he be able to enjoy this non-residential status?
Hello, and welcome back to yet another episode on the Vikasit Way. This is the second part of our previous video on NRI taxation and international tax planning, the link of which you will find here on the screen. Today we have with us CA Sriram V Rao, and to moderate this episode, we have CA Gaurav R Hegde from Mangalore. In the previous episode, we have understood a lot of concepts and attained conceptual clarity on NRI taxation. Today, we will further understand some more topics with CA Sriram V Rao. Yes, sir. Let's continue the conversation.
One of the most common queries we get when it comes to real estate is if an NRI wants to buy a property in India, then what proceeds can he use or how can he go about it? So question number A in that is, can they purchase it to their NRE or FCNR account?
They can definitely purchase from their proceeds from NRE and FCNR accounts because see, they can even purchase from NRO account as well. But the investment that they make from NRA and FCNR account, that will be basically from the sources which are accumulated from outside of India. So when they make investment from that source, the investment will be considered as made on repatriable basis. That means whenever it is ultimately sold and earned some capital gain or whatever it is, the proceeds therefrom are repatriable and the restrictions are much lesser to for the purpose of repatriation of that proceeds. Whereas for other things, if the investment is done from NRO proceeds, even though the source were come from outside of India to NRO and from there it is invested, the investment will be considered as made on non-repatriation basis. So if that person wants to transfer the proceeds therefrom, it is not that not possible, but the route becomes that much more difficult.
And with this NRE money or NRE account, FCNR account, can he purchase any kind of property in India?
He can purchase, you are talking about real estate property.
Real estate properties,
Yeah,
agricultural, commercial.
He can purchase any property other than agricultural plantation properties.
Okay.
He cannot purchase agricultural or plantation properties. Non-resident or OCI foreign nationals, they are prohibited from purchase of agricultural or plantation property in India.
And when we talk about non-residents, is it different for non-residents and non-resident Indians?
No, it is same for non-resident Indian citizens as well as non-resident foreign citizens, right? Like OCI card holders or non-OCI card holders, it's one and the same. They cannot purchase agricultural land or plantation property in India. Other than that, they can purchase any properties. But a person who is a foreign national having OCI card, only they can purchase properties in India. If a person is a foreign national, they cannot purchase properties in India if he is not having a OCI card.
And now when it comes to selling these properties, what are the aspects he should look into when it comes to TDS, or say once he's sold, he wants to take this money outside India, then various forms which he has to file, whether he should visit his CA and discuss with him, so tax planning and all this.
See, obviously whenever a property is sold, before the sale of the properties, it is advisable for any person rather to take some consultation from tax person as well as advocates. Both has to come together, because for legal side, advocates has to see, from taxation and other angles, the chartered accountants are advisable people to be taken consultation from. So from that perspective, it is always advisable, and again he has to pay the taxes before he remits the proceeds outside of India. The taxes will have to be calculated based on what is the applicable rate of capital gain and how to calculate the capital gain. The chartered accountant will be the best person, whether it is a long term, short term, so many aspects to be seen. At the same time, whenever a person is selling a property, the buyer has to deduct tax at source. That is his obligation. Seller is responsible to truly disclose his whereabouts. That means he is a non-resident, he is a foreign national. All that he has to disclose to the buyer, and the buyer is supposed to deduct the tax at source based on the fact and circumstances. Tax at source, deduction of tax at source is not the final tax liability for the seller. After deducting the tax at source, the seller has to file the tax return, claim the credit of the taxes deducted at source, TDS, while filing the tax returns against the actual tax liability what he has to pay in India. If any excess TDS is being deducted, he will get the refund. If any shortage of TDS, then he has to pay the taxes. Once this process of payment of taxes is done, then after payment of taxes, net proceeds whichever remaining in the hands of that non-resident is eligible to be remitted outside of India. FEMA, there are certain restrictions. It says that the banker who is remitting this money, he has to look into the FEMA provisions and see whether he is eligible to be remitting these funds and what is the source of that, and whether he has paid the taxes. So generally bankers will ask whether form 15 CA-CB has been obtained. If not, you obtain. Okay, from the remitter they will ask this question. So you have to explain the fact and circumstance. If applicable, then obtain form 15 CA and CB. 15 CB is a certificate from a chartered accountant saying that he has the person has paid the tax on that amount. 15 CA is a declaration of that by that particular individual who is remitting, saying that I have already paid the taxes, like that. So it is a dual authentication kind of a thing that needs to be provided if it is applicable for that particular transaction.
Both of these declarations, both the
generally yeah.
Okay.
Sometimes only 15 CA. There are certain fact and circumstances that is very subjective, and we need to look into the income tax provisions for that. And FEMA compliance is, if it is a commercial property, the entire proceeds can be remitted. If it is a residential property, then up to proceeds from up to 2 residential units can be remitted. In my view, any number of residential properties sold, the proceeds can be remitted, but some bankers are not allowing that, because there are certain rules which are creating some grey areas in respect of interpretation. And proceeds from agricultural properties or plantation properties, if it is acquired in consensus with FEMA regulations, then the proceeds therefrom, in my view, can be remitted outside of India. Again, certain bankers have their reservations about it, because it is a very grey area. So sometimes if the bankers are not allowing, then one can approach RBI and seek their permission or seek their guidance about that, and if they allow you, then you can remit, otherwise you will be held up with that fund in India.
And what about ancestral property, sir? So the sale of ancestral property also, like, does it have any restriction, or how does
No, this is very, see, ancestral property means as per a will he has received, right, after the demise of that particular person. The taxes on that also has to be paid that person, okay, because that person, he has sold the property, earned capital gain, he has to pay the tax, and after that he can remit the proceeds. And for your information, I mentioned that agricultural land or plantation property cannot be purchased by the non-resident, right. At the same time, he cannot receive it as a gift as well. even though from relatives or close relatives. But if the person has received that agricultural plantation property under a will, that is after the demise of that particular landowner of that agricultural plantation property, that is quite possible, because death is out of control of any act, right? It is inevitable in the life of a person. So, after that anything can happen that as per will person is receiving, that is cannot be stopped by any law. So, FEMA is also not having any restrictions for that particular purpose. So, the proceeds received from ancestral property can also be remitted outside of India. There is no problem with that.
Next question is, this non-resident has enjoyed his life abroad. He's earned a lot of money, built his assets there, has his Indian bank account as well, and now he's decided to finally come back to his motherland, India. So at this time, for how long can he hold his foreign currencies, foreign assets, and what about his Indian accounts? Until when will he be able to enjoy this non-residential status?
Okay. Now, first of all, in these circumstances, one needs to again look into two acts, FEMA and Income Tax Act. But if the person is coming back to India, as per FEMA, on the day he comes back to India, becomes a resident. There is no doubt about it, because he is coming back with the intention to stay in India for an uncertain period. So, if he is coming back like that, then obviously he will become resident in India, and whatever his Indian bank accounts, which is he is maintaining like NRI, NRO, that needs to be immediately converted to resident account. So, conversion is just redesignation of bank account type from NRO, NRI to resident, that is it. There is no closure of the fixed deposits and all those things as per the RBI guidance, right. If he is having any FCNR accounts, that he can hold it till the date of maturity, because FCNR means foreign currency non-resident account, that can be held only as a fixed deposit kind of an account. So, that can be held till the date of maturity. Upon maturity, that foreign currency funds can be converted either to Indian resident account, to INR, or he can convert those funds and keep it in foreign currency only, but under an RFC, resident foreign currency account. So, there is no problem with that. This is how the bank accounts has to be changed. At the same time, his investments in India, demat account, so on and so forth, all that he has to intimate that he has become a resident in India, and he has to apply for conversion of that account to resident accounts, that is it. So, this is about conversion of Indian assets, right. When it comes to foreign assets, he can hold any of the foreign assets indefinitely, no problem with that, right. So, there is no restriction under FEMA. If he has sold some foreign assets, earned income therefrom, he can reinvest outside of India as well. That is also quite possible. There is no restriction under FEMA, right. Now, this is as far as FEMA is concerned. Now, let us come to income tax. Income Tax Act says that a person who is a non-resident, he is taxable in India only on the income earned in India,
Right.
that we have discussed in the previous episode. So, when he comes back to India, there is a quite possibility that at least for 2 years, if not for 3, sometimes it may not be there also, that it depends on fact and circumstances, at least for 2 years in most number of cases, that person can enjoy resident but not ordinarily resident status, RNOR status. If that person is enjoying that status, during that period, again only his India sourced income will attract tax in India. So, that means if he has earned any other income, say for example from some other capital gains outside of India, interest or dividend outside of India from his investments, or rental income outside of India, all those incomes will not attract tax in India at all, zero tax on that when he is a RNOR. Once he becomes a resident and ordinary resident, then all that income will attract tax in India.
Got it.
Right? This
Wonderful.
is the two major differences.
Wonderful.
See, the restriction is only on maintenance of foreign asset or not. That is quite possible. Then comes taxation of the income.
Right.
Okay. Then now there is also one more. There is something called as Black Money Act. Now this BMA says that once a person becomes resident and ordinary resident, whatever foreign assets he is having or foreign some signatory authority or something like that, he is a power of attorney holder somewhere in bank account, all that has to be disclosed in his Indian tax returns, right. So that becomes mandatory for that person. Whatever is the value of that, everything has to be disclosed in India, right. So if not, then again for each of the non-disclosure of each of the asset, there is a possibility of levy of 10 lakh penalty in India. So that's also one more thing one returning NRI has to keep it in mind. So this compliance under BMA will be applicable only once a person become resident and ordinarily resident under Income Tax Act, and no implication of the FEMA under BMA.
Yes, sir. So we'll slowly divert to another segment.
Okay.
It's called Unfiltered with Vikasit.
Okay.
So today we'll try to bust some myths that most of the NRIs usually have. There are some assumptions in the minds of many people who live abroad. So we will ask you simple questions,
Okay.
and you can answer in true or false or justify
Okay.
the same.
Okay.
So we will begin, sir.
Definitely.
Yes.
If the seller is a non-resident, then the TDS rate applicable on his property sale is 1% for the buyer.
No. If the seller is a non-resident, then the TDS rate would be 12.5% if the asset is held for more than 24 months, or 30% if the asset is held for less than 24 months, plus applicable surcharge and cess. So it may become 12.5% or 30%, right. It will never be 1%.
So for buyers, it's advised to see who your seller is.
Correct. Absolutely. He has to see. If there are multiple sellers, then each seller wise they have to see who is a resident, who is a non-resident. If a non-resident seller is there, then rate of TDS will be different, manner of filing tax TDS returns will be different, and he has to obtain TAN, so on and so forth.
And when non-residents sell their properties and earn capital gains, they are not eligible to claim investment link deductions like 54, 54F, 54EC.
No, they are eligible to claim. They can claim all these deductions possible. There is available.
NRI directors can lend loans to their companies.
The answer is no. They cannot lend a loan to the company just being a director. There is lot of FEMA regulations in this regard, because lending a loan is by a non-resident will be covered by ECB provisions under FEMA.
Okay.
Right. So there is no specific directions about NRI director lending a loan to the company under ECB provision.
Okay.
So because of that, since there is no direct provision under ECB, it is said that he cannot give loan to Indian company. So this is what the rule says. There are also another school of thought, but it will take a long time for me to go into each and every aspect. But generally I would say it is no, it is not at all advisable.
NRIs can do the business of buying and selling properties out of their NRE proceeds.
The answer is no, they cannot do real estate transactions. Buying and selling of properties in India is coming within the real estate. But one-off transactions like an investment, that is possible, because I am just investing in one property. I am not repeating that act.
So it can't be a business.
It cannot be a business. I can invest in 10 properties and keep it for myself or rent it out, that is possible, right. But I am purchasing 4 properties, selling one, another purchasing another 2, selling off 5 another. So, again repetition of those transactions, which is called as business transactions, those cannot be carried out by a non-resident in India.
NRIs can deposit any amount of funds into their Indian account.
Definitely, it is possible. It is possible, quite possible.
So viewers, I hope you all enjoyed both the episodes as much as we did conversing with CA Sriram V Rao. Thank you, sir, for joining us and being a part of the Vikasit Way. It is our pleasure to have you on this episode, sir.
You are welcome, and it's my pleasure as well. It's first time on Vikasit Vidya. I think hope this continues for future as well.
Yes, sir. So our goodness partners, Achal Cashews, has sent this hamper for you as a token of our love and appreciation. Thank you so much for coming. And this is for you from our goodness partners, Achal Cashews. Thank you for coming.